Hi, I am Andy DeFraga and I created the Evolve Planner, and today we are going to go through an example of using the Excel document that I created as a companion to the Evolve Planner. You're meant to use them together. I know some people might just want to use the spreadsheet, and that is fine too. But it is designed to look similar to the Evolve Planner and to help you stay on budget throughout the year so that you can achieve your goals. I am going to use small numbers so that we know that these are an example. And the example is in one of the tabs in the spreadsheet once you download it so that you can refer back to it. So let's get started. So with the Evolve Planner spreadsheet, you are going to enter your income for the month. So paycheck, and we're going to say $100, and then tutoring income for this person of $50. Again, these are just example numbers. Now your fixed costs. People have asked me about fixed costs, and these are the costs that you have already committed yourself to for the month. So their rent, utilities, any sort of membership that you might have. These are things that you know you're going to have to pay, and there's very little room for renegotiation in them. So they are fixed. Again, that's going to be rent, and we'll put $5 in for rent. Utilities, $2. I wish. Gym membership at $3.50. A car payment at $4, and then we're going to say insurance at $2. So that figures out your fixed expenses. So right now you can see that the spreadsheet is already calculating for your spending plan $133.50. So it's taking your income and subtracting those fixed costs to give you that amount. But we're not done. So this area of the spreadsheet is actually pulling from these other tables, which is where we're going to go to next. Now, most of us do have credit cards and student loans and other kinds of loans that we are probably paying on, which is, the way it is. So we will enter that information here. So let's say you have a Visa and you have a total due of $10 and a minimum payment of $2, and the interest rate annually on that Visa is 25%. You have an Amex with a balance of $15, a minimum payment of $250, and that is at 27% annualized. And then you have a student loan with a balance of $150, minimum payment of $150, and the interest rate on that is 12% annualized. So this means that you have $6 that absolutely has to get paid because that is the minimum payment. And that number is pulling right in here, so it too is getting subtracted from your income for your spending plan. But let's say you have an extra $5 a month that you'll also like to put towards your credit card repayment plan. Now that $5 is added here, so the total you're going to pay back now is $11, and this table applies the extra money to the credit card with the highest interest rate or the loan with the highest interest rate. I do get this question a lot also, like how do you pay back credit cards and loans if you have extra money? And the best way to do that is to always pay the card or loan with the highest interest rate first, even if it has the lowest balance. So you might be inclined to pay your student loan because it has such a high balance compared to the credit cards, but the interest rate is 12%. Leave that alone. You're better off paying the Amex off sooner because the interest rate on the Amex is higher than any of the other interest rates. So again, always pay the highest balance or the highest interest rate first. The balance doesn't really matter. You always want to pay the credit card with the highest interest rate first, and this table automatically applies those payments to you. So now you know you need to make a payment of $2 to your Visa, $7.50 to your Amex, and $1.50 to your student loan. And again, it's pulled in right here. So now we're going to do the goal, your savings plan goal. And this is, what you're saving for and how much a month you will need to save for these. So a vacation, and you need a total of $60, and you've already paid $5, and you're going to be taking that vacation in 5 months. Then maybe you're saving for a new computer, and that's going to cost you $50. You haven't saved anything, but you want to buy the computer in 6 months. So this table will figure out how much you need to save this month in order to reach your goal of $60 in 5 months and $50 in 6 months. And that amount is going to get pulled in right here on your savings plan or on your fixed cost and subtract from your income to give you $103 for your spending plan. Now, here is where you have some flexibility. Your spending plan are those categories where you can make choices like, do I have to buy the most expensive things at the grocery store? Do I have to eat out? Do I need to go to Starbucks? So these expenses are they're not fixed. You have some decision-making power in here, and this is really where you need to concentrate your time as you go through your month. Your fixed costs are fixed. You have to pay those. But these costs, you can make choices. Fancy French restaurant, or you could go to Chipotle. It depends on how much you have left in your spending plan. So for this person, they want to track grocery, and they're giving it a budget of $50. Out to eat with a budget of $20. Shopping, budget of $20. Starbucks, $5. Movies, $5. And then a miscellaneous with a budget of $3. So we've pretty much allocated our entire spending plan amount, $103.17 and $103. And that's great. And now once you've done this, I like to scroll up and save the document like this so that every time I open it, I don't have to look at my spending plan and my fixed costs and my income and my credit cards. I'm just concentrating on my spending plan. So it takes 2 seconds or maybe a little more, like 2 minutes, to enter in here the amount you've spent on a daily basis. So let's say on the 1st you went grocery shopping and spent $5, and then on the 4th you went out to eat with your friends and you spent $3.50. You go shopping on the weekend and spend $5, and you also go to Starbucks and spend $2.50. So as you can see, as you enter the numbers in these columns, as you spend them, it pulls the amount into your spent column and lets you know how much you have left in your budget. And that's all you have to be conscious of. So when you're trying to decide, do I want to go out to eat? Where do I want to go out to eat? If you just take a minute to look at your spending plan and where you are, it can help you make the decision that will keep you on track to achieve your financial goals for the year. And if you do happen to go over budget, let's say you spend $16 here, it will turn red because you've spent over your budget, and it will bring you to 0 for the amount left to spend in shopping. So hopefully that will help deter you from spending any more money in that category for the month. I hope you found this helpful. Please feel free to contact me through the website if you have any questions. And I look forward to hearing about what everybody does this year with their Evolve Planner. Thanks.